Hey guys, last Friday of the first half of 2025. How can that be? Welcome to Last Word, a Chrisman commentary show. Today's episode brought to you by the Chrisman Commentary Marketplace. If you scan the QR code that's right there below Christy, point to it, Christy, help us out. Nope, other way. There you go.
This way.
Scan that QR code. Check out the Chrisman Commentary Marketplace. Awesome companies in there. Hey, FinLocker's in there, by the way. If you are a service provider, a tech vendor, partner to the industry, and want to get in front of 90,000, 100,000 plus Chrisman commentary followers, click that QR code, check it out, and get yourself set up. Christy, KP, happy Friday.
Happy Friday. I should, this entire week, every day I've been like, oh, today's Friday. And then I get disappointed, and then it's like Groundhog Day. You got to go and start over.
Yeah.
The world of origination.
Right. Well, we're about to roll the clock, right? Tuesday everyone starts at 0 again. And then the official second half of the year kicks off. So crazy.
Yes, all of us commissioned employees start from 0 next week. I cannot tell you in the last 24 years how many conversations I've had with, operations employees who are like, I think I want to try my hand at sales, and they end up being the best salespeople because they have such a good ops fundamental base. But you have to let them know, hey, I know you see the commission checks rolling in and you're like, I want that money. But let me tell you, you start from 0 every month. You start from 0 and you only eat what you shoot. Are you ready for this? And some of them are like, I'm just going to keep my salary. But there are a lot that make that leap and they become incredible salespeople just because of their experience. And, it just takes time to build up a referral base. And whether you're an account executive in TPO channels or an originator, once you get it going, it's, you just get addicted to the grind, And so like we were just talking about before we went on air, there's no vacation. It's 24/7. You're always on, you're always available. It's a lifestyle.
Well, I don't know that I'd want it to be any different. I don't know that I'd want to go to a job or a day-to-day function that I wasn't so excited to be doing, that I wouldn't want to do it all the time. But that does bring up a point of people need to unplug and recharge and do the things. So how do you do that in your day-to-day? KP, you're really good at it. When you're on the road, do you take an extra day here? You get to bring your family along. You do all the things that keep you recharged and reset. It's not the traditional thing that say a standard W-2 employee with a salary does.
Yeah, part of my recharge is like being at events with people, like being, This is great, this is awesome on a screen, but it's like 10x awesome when we're all in the same room together and you're having those kind of human interactions. And yesterday was that way for me here locally. We had the Rocket Classic PGA event with its annual stop in the great city of Detroit. And so cool to see how many industry participants support the city of Detroit through Rocket's effort. And yesterday was a great example. You had Fannie Mae, Freddie Mac, you had representatives from NBA and ICE, all the biggest of the big in our industry, FinLocker, representing, and just cool to see in how people come together to support each other in our city.
I had an invite from class evaluation to go up there, but I'm here on family vacation this week here in Park City, working, obviously, clearly. Well, woke up, tried to go to bed like a good boy at 11 last night, woke up at 1:45 and pounded out emails for 2 hours just to try and get ahead of it. So, sacrificing sleep is always a good life hack.
Yeah.
I feel like the older you get, the harder that is. So, Brian, as you guys were out at the event yesterday. Was crypto the number one topic of conversation given the tweet from Mr. Pulte?
I don't know if it was number one, but it was definitely, people were talking about it. And, there was a group of originators together, and they were less, they're still not sure how it's all going to play out, right? From the kind of street level. But in terms of I would say some of the industry participants out that were not the originators, I think there's a little bit of an interest, excitement, how's this going to work in terms of, the flow of documentation and all that. But, I think everyone's looking for angles, right? What's this angle? How do I play this angle? Is this a new flavor of non-QM, even though it's not non-QM? It'll be interesting.
Christy?
Yep.
You want to speak on it since you brought it up, or do you want me to ramble?
You can I think I will jump in. I just think it's interesting because when you think about it, how is it different than a stock account? Stock accounts go up and down, and you have to value them. And so from a practical standpoint, it's logical that, hey, this is a stock account. Many people think investing in the New York Stock Exchange is nothing but gambling, right? There's no real value behind it. You can watch companies go up and down, yada, yada, yada. And Bitcoin and other forms of crypto are very similar. And then you get the opposite side. Well, this is a giant Ponzi scheme. Well, maybe. But if somebody's buying it and you can sell it, then you've got a market for it, at least today. And so we have to react to what is the reality of today. And how do you treat that differently than a stock account?
It just matters. It matters at a point in time when you liquidate.
well, the point of the guidance from FHFA is you don't have to liquidate. You can use it as assets. So it'll just be used as reserves.
Right.
So you go to your Coinbase account, rip off a statement, go, here's what I have in reserves. So it's just validation of digital currency. And what isn't digital? Telehealth, buying online from Amazon, Instacart, AI ads thrown our way, digital money, it all makes sense. So you guys know I'm a huge Bitcoin bull. I've been in it since $8,600 a coin. And I've used and sold some of my coins in the $80,000 range to fund my construction projects. And it's real money. I bought it. I mean, not to, I'm not trying to humble brag, but I'm just saying, like, it's real. It's been validated. And I still have some. And I plan on buying more when we sell our next house and putting it back into it. It's not going anywhere. And it's been going since 2008. And I think the validation of at least Bitcoin, which is all I really read into it. I mean, there's stable coins. Look at Circle, the largest IPO in history. I mean, in history, they are pretty much the big backer of USD, which is a US dollar coin. And, money's going digital. I mean, who carries cash? I mean, I mean, you use a credit card? Do you use a debit card? It's just digital money. It's just another version of digital money. It's an evolution of digital money. Yes, some of us carry cash, but you don't pay everything cash. Less than 10% of all transactions in our $33 trillion economy, less than 10% of all transactions are done with cash.
I have cash, KP. You know why? Do you know why I carry cash?
To tip the valet.
That is exactly it. That is why I have cash.
I don't even do that. This has been folded up in my travel backpack for probably a year, and it's literally the only cash I have, $20. Even yesterday, I valet parked to go to the golf event, and on the way out,
and you Venmo.
Yeah, I'm like, dude, give me your Venmo. They pop it up there, you scan it, and life is good.
Yeah, it's funny.
I will say, I got stuck in an airport the other day, and I discovered I was trying to buy like a snack, some food to get on this plane because I hadn't eaten all day. You guys know my struggle with finding time to eat. So I go to buy the thing, and my credit card gets declined, and I'm like, what? turns out there have been a bunch of fraudulent charges. Somebody had gotten a hold of my credit card number and my credit card got canceled. And so I had literally, that was my only credit card in my wallet. And we won't talk about how stupid that was, but in a rush out of the house, I only had that one. And so had I not had any cash, I would not have been able to eat. They don't take Venmo at the airport.
Somebody does.
Don't you have a credit card?
My credit card got compromised and I only had the one.
Oh my gosh. I have the same 2 credit cards plus my corporate card forever, and I'm about to add Mesa as soon as they print them out, right? And so anyway, at least you can trace it, right? With crypto, it's on the blockchain. It's an immutable, completely transparent ledger, and you can see every single transaction that's ever happened on the chain. And that doesn't mean it can't get hacked. It does happen, but the whole point of the FHFA guideline is that you don't have to liquidate it to turn it into cash. To then say, okay, here's my reserves. You can just say, here's my statement.
It's just like stock. We're treating it just like stock.
And to your point about stock being gambling, I'll say something that Jim Cramer says. People buy bonds, treasuries and mortgage-backed securities not to lose money. They buy stock on the risk to make money. And today, the stock market, the S&P 500, is at all-time highs. All-time highs. People feel wealthy who are invested in stocks and see companies like, I remember when I grabbed the first iPod Classic, and I was like, oh my gosh, you can rotate this thing around and do the screen. And I bought $20,000 of Apple stock in 2004. This is pre-iPhone, in a 401k that's protected, so I don't have to pay any capital gains. I mean, just look around the world and see what's working and invest in that company and ride along with it and have time in the market. It's not gambling. It's just using common sense,
Some people talk about it as gambling. Yeah. There are some people who do day trading. That really is more of a gambling opportunity. By the way, Ira, I think you are dead on. This has been a busy week for stuff happening. The buy now, pay later is going into, not only have they asked for commentary on it, but it's going into the FICO score. I think that there'll be some interesting things on how that gets reported and how consistent it is. Yeah. Because you go and you get $800 on your buy now, pay later to buy your refrigerator. Are those guys going to be really good at reporting and all the data that has to be kept up with that I think about when I report to the credit bureaus? Now, places like Affirm or I think that's the name of it, all those companies that do it for I think those will be a little bit easier. But this is the article I saw.
And digital layaway.
Yeah.
Digital layaway, right? What we're not talking about is what you get on your credit card, where they say, hey, we're going to use this buy now, pay later, and you can, put it off to this different type of loan versus your credit card, right? That was always reported. What's not being reported is the store ones, or when you go to your favorite, doctor, dentist, plastic surgeon, and they have the buy now, pay later. None of that stuff was being reported. And I think they said it was like a $2 or $3 trillion amount of debt or something, some crazy number like that. I am just making that number up, but it was a big number.
Of course, yeah.
It's just leverage. It's debt. Debt is leverage. It can be a good thing unless you get over leverage. I read a quote last week from Charlie Munger, who was Warren Buffett's partner and co-founder of Berkshire Hathaway. He passed last year. R.I.P. Charlie. He said, the 3 things that will ruin you financially are liquor, ladies, and leverage. So yeah, debt is it can be a good thing, right? Our mortgage is literally debt. How else are we going to get into home ownership, right? You're leveraging, but you're leveraging against an asset that's got time served. And even as soft as home price appreciation has been, because the Fed has kept rates higher for longer, we're still seeing home price appreciation, and it's still the best, I'd say conservative asset class in the United States. Our liquidity in the stock markets, futures, bonds, mortgage, it's good. We have a great liquidity set of liquidity pools around the U.S., and it's a big reason why we're the number 1 economy in the world. And the dollar is still the reserve currency in the world, because where are you going to go? You're going to go buy renminbi from China, an autocratic country that fixes their books and cooks everything and manipulates their currency. I mean, people wanted to do gold. Gold, I think, is like a $12 trillion, maybe $14 trillion market class. It's probably 14 at this point. I mean, it's nothing compared to the stock market, right? So, or cash or treasuries. So anyway, we could wax philosophical on this, but the bottom line is, it's an asset class. It's been validated. It's been deregulated. This administration wants to be the cryptocurrency capital of the world. And this is just another step in that progression. And I'll be curious to see where we go in the next 3.5 years when this administration is done, how much better, the crypto market will be. And, you don't have to get FOMO and go buy Bitcoin now. I mean, you can wait. Over time, if you time in the market instead of timing the market, that's okay. If you've got, put a little 3% of your assets, put it in Bitcoin, and you don't have to go YOLO and day trade it and put a big slug in there and hope for it to go to 150,000 by the end of the year. I mean, who knows, but it's been validated. And so, on that note, the data that came out this morning for inflation, although it was a little higher than expected, if you do a 0.2 or 1% run rate, I mean, we're at 2.4% inflation, even though the year over year went up to 2.7. Inflation's still low, and so now we're going to look at all the data next month and see if that's enough for the Fed to go, oh, well, the tariffs, this, that. I mean, people spent less, made a little bit less than expected. And again, like I've been saying all along, I mean, just because prices go up, there's not a gun to someone's head, go, okay, I got to buy everything. People don't have to buy more expensive stuff. And so far the data shows that they're not.
I dropped an article into the comments for everyone. Christy shared this right before we went live, and I missed this one yesterday while on the at the Rocket Classic. So the U.S. FinTech press release yesterday. Christy, you want to start us off on this one?
That was an interesting thing that popped up in one of my CMB chats that was like, hey, have you guys seen this? Like probably the nanosecond that it came out. And what do you think it means that Fannie and Freddie are jointly creating this U.S. Financial Technology LLC company that is in theory going to manage $6.5 trillion in mortgage-backed securities and look at how to sell the fintech products that the agencies are creating out to a third party. There was a lot of commentary in our chat anyway around, well, what does this mean in terms of the privatization of Fannie and Freddie? So that's obviously all speculation, but does this put them on is this part of the next step, part of a master plan to get them out there?
It is. And I'll tell you, being in closed door rooms with Bill Pulte, and talking about the privatization of Fannie and Freddie, one of the big concerns that a lot of executives have is the common securitization platform. And will it remain independent and intact?
Right.
And this validates that. That's one of the biggest altruistic things about Fannie and Freddie being in a conservatorship is that securitizing universal mortgage-backed securities, which again, all we do is buy and sell money. And if you want to dumb it down to it in the cold, heartless, unforgiving secondary market perspective, we buy and sell money. So if Fannie and Freddie are operated privately, will the securitization be part of that? And the technology, when people ask me what's the greatest technology that's been put out in our industry, I always say it's AIM and day one certainty. The fact that Fannie and Freddie back in 2016, created the ability for income assets and job employment to be digitally verified, spun out all these different vendors and points of sale and all these different things, that make it easier to transact digitally on, conforming loans. And this validates the fact that the government will continue to protect that IP, the technology, and the common securitization platform, which is run by I think less than 20 people to securitize all loans in our market. And
is that a real number? Less than 20 people? Is that like a real number?
I swear. I was going to say some stupid number like 12 or 17. Someone quoted it in that closed door meeting, but it's a very skinny operation, securitizing, all the mortgage-backed securities, on Fannie Freddie side. And that's now, that to me is a sign of an explicit guarantee that the government is spinning out in this separate LLC, the separate entity, and it will be protected away from someone privately owning Fannie and Freddie. They can't muck up the securitization part of it. I love it. I think it's a power move, and it is a step in that process. It makes me feel a lot better about Fannie and Freddie going private, because I have my doubts on who's going to take it over and what they're going to do and pick and choose winners. They may say, sorry, FinLocker, you're out. You can't connect with DU and have perpetual DU. They may say that, and when it's private, they pick winners, but they can't pick winners in securitization now. And so I think that's a huge, huge win for the stability of mortgage-backed securities. Plus, the SLR that, where there's I guess less reserves required now by banks and financial institutions, makes it easier for them to hold more treasuries and more mortgage-backed securities without having to set more money aside. 6% reserve ratio now down to 3.5%. Those are massive, massive moves to continue to protect our markets, to keep rates low. So when people buy mortgage-backed securities around the world, they feel protected by the strength of the U.S. government.
No, I think you're dead on there. And these are topics that keep coming up, because we do have a housing affordability challenge in our markets today, with where rates are, with where costs are. You talk about the continuing appreciation that we've seen, but we are seeing builder inventories start to elongate in some places where we've got 10 to 15 months of builder inventory, and you're seeing builder incentives increase. KB came out and said they're going to decrease the cost of their homes. They're not adding additional incentives. They're actually going to reduce the cost of homes. And what happens in the home buyer psyche, folks that were on the sidelines that are like, oh, I could jump back in, but I think prices are going to go down, so I'm going to sit and wait. And what kind of a cycle does that put us into?
I will say that historically our inventory is still below the 6-month average. And if you look at when homes are completed, they're still rolling off the shelf, I think, in 3 months or less. Historically, we're in a good spot, although compared to the last couple of years, inventory is up. And Austin's a tough market right now, for sure. I know that you lend in other places, but Austin's is one of the toughest markets when it comes to that. But lower rates cures everything. I'm telling you, we get below 6.4% on that Mortgage Daily News average 30-year fixed rate like we did late March, early April, and boom, people come out of the woodworks. And I will say one absolute negative impact of tariffs is people recoiled and didn't go shopping as much. It was dead out there, and listings came on, and people put prices out there a little too high, and unreasonable. But as rates have come down, we're under 430 on a 10-year treasury. Rates are good right now. Locks are picking up. People are still looking. Still the end of spring purchase season, and lower rates definitely cures that. Insurance obviously is a huge problem, and there's a lot of local level costs that go into inputs and building new homes. But existing homes, they can get unlocked. People are aging in place. Rob, Chrisman, and Rich, and Robbie was on for a heartbeat at the beginning. They had Meredith Whitney on yesterday. That was the last thing I did before I went to bed at 11 was listen to them. And they're talking about people aging in place. And so there's just not as much of the existing home market from people who are living longer and aging in place in their homes. They're not selling. And so again, we all know as soon as rates get to a certain level, my kind of napkin math is 6.4% on a 30-year fix. You get there and under, boom, you just start to see that inventory go away. We just don't build enough. And now that we have, California, like ICE is literally walking around on patrol. There's construction projects that on some days are literally empty. And so, that's another negative impact from this administration where I've seen it firsthand. It's not everywhere. They're not out here in Utah, because I guess Utah voted red, but they want to mess with, Los Angeles County and in Orange County, ICE is out on foot patrol. So there's a little bit of weaponization and politicization of ICE. I recognize that. And so, yeah, housing supply, I think, is in a good spot, even though there's more of it. If growth continues to slow, consumers continue to recoil, job markets continue to weaken, 1.9 million plus continuing claims, people, it's harder to find a job. You're going to see rates come down. And all the Fed speak this last week was like, let's do some more cuts. Now the market's saying 3 Fed rate cuts this year. If you look at the Fed futures, so we all know it can change very quickly.
I want to shift real quick. I want to go back in time, not too far back. So, and we've talked about this just about every week for the last 6 months, but the trigger bill legislation.
That's the House.
Yeah, everything's tracking. And I want to just I want to get your thoughts, feedback, interpretation, because there was a debate yesterday at one of the tables I was sitting at with a group of folks, most of which are, street level originators, right? And another kind of higher level executive basically said, guys, this doesn't help you at the street level, the legislation. So let me read something, and then you guys kind of give the audience your interpretation. So as drafted, the language says that 6 months after enactment, the legislation would eliminate the abusive use of credit trigger leads while preserving their deployment in appropriately limited circumstances. Under this bill, trigger leads would be permissible under the FCRA only in limited circumstances during a real estate transaction and only to provide a firm offer of credit. A CRA would not be able to furnish a trigger lead to a third party unless the third party has certified to the CRA that either the consumer explicitly consents to such solicitations, which doesn't exist, the third party has originated the residential mortgage loan of the consumer, the third party is the servicer or of the current residential mortgage loan of the consumer, or the third party is an insured depository and holds any account with that consumer. Number 3 and number 2, I think we're all square on that. If you're a depository and you have any financial relationship with a consumer under the legislation, you would be a permissible party to acquire the monitoring and the trigger leads. If you're the current servicer, same holds. But number 1 is kind of gray, right? The third party has originated the current residential mortgage loan of the consumer. So my interpretation all along is the lender, the originating lender, right? Some of the folks that were at the table yesterday are mortgage brokers, so they're technically not a lender. How do you guys read this?
So let's define help and what's the goal. So as written, regardless of the gray area, if I'm originating a loan today and it gets sold to the trigger lead gets sold to 180 different people and there's 180 different phone calls, that's bad for me as the originator.
Totally agree.
If this bill limits the number of people that can purchase that trigger lead and the number of times that consumer, that member is going to get called, then that's a good thing. And it has a positive impact on me as the loan officer, no matter what. Now, if we start looking at the flip side of that coin and saying, well, am I going to be protected and am I still going to be able to purchase that trigger lead? If I'm the broker, am I considered the originating lender, or is it whoever I sold the loan to who actually closed it that gets to purchase that? And then are they going to send that lead back to me? I think that's definitely gray. I don't know, unless they've defined in the bill what the originating lender is, how that gets treated. By the way, you said something too that says you have to agree that you're going to make a firm offer of credit. And
you can't do that as a broker.
You can't do that as a broker. But also, by the way, today, that's part of the rule to buy trigger leads is you are supposed to be certifying that you are making a firm offer of credit, which we know isn't happening. Right. So if there is not some definition around what does a firm offer of credit have to look like, then we haven't solved any problems.
Well, I'll just say we've already built a workaround for this. So if you're a retail employee of any lender, you're good, right? We send out firm credit letters all the time using Trust Engine or Total Expert or whatever. If you are a broker that sent us that loan, we can set up the ability for that broker, not a non-delegated correspondent, but a broker, to send out triggers with a firm credit letter, offer credit with PRMG's name on it. So we're enabling our brokers to be able to do it. So there's the workaround. And then, if you're a non-delegated correspondent, you've got a warehouse line, you've taken more risk. I think brokers are going to move to some of the larger non-del cores because those are quote lenders, even though they don't underwrite. And so I think it just narrows the scope down to the originators that originate the loan, the end servicer, and banking institutions with the bank relationship. So all these chop shops that buy triggers have zero relationship, do zero cultivation of relationships in the community, they're out.
Yeah.
But I contend they're just going to work around and use AI voice and AI text, and they're going to just use a different way. They won't use credit triggers because now there's legislation to hammer them for $5,000 a pop or more, I guess. And they're just going to get cell phone numbers. But I go back to what you said, Brian. It's all about the opt-in. It is all about the opt-in. We work very hard to get a TCPA and CCPA compliant opt-in from the bar to be able to market our services to them. And that, I think, is where, being part of a lender or partnering up with a lender that helps you enable that, that's how you continue to do business if trigger leads is your model. But if you have no relationship and you're just a bottom feeder trigger lead, originator, you're in trouble. But again, I think they'll just grab an AI voice bot and just start making phone calls and until they get clipped and get fined and sued for that, which will probably be the next legislation, which I already brought up to the NBA. Copy and paste the same thing for AI voice.
Well, I think that we have Brian's question was very specific. Is there a benefit to this bill? And 100% there is if you're originating loans today and your client is getting annoyed by the 180 phone calls. So clear benefit to having this legislation passed and not a downside on that.
To the consumer, but not to brokers, which is what Brian's question was. If you're a broker.
But as a broker, if I'm originating a loan today and that lead gets sold a bunch of times, that's negative to me. And so if this reduces that on the very front end of originating,
which is bad for brokers. That's very bad for brokers who have no origination, no relationship. That's what Brian was asking about, that gray area, because it's got to be the lender, and brokers are not lenders.
I agree with Christy. Christy's saying that the reduction of the scale of the trigger.
Well, yeah, duh. That's the whole point. I mean, we know that.
It's everybody, because we're talking about originating a loan, right? I'm not talking about whether or not you buy the lead. I'm talking about as you originate the loan. And brokers originate the loan today. They don't want their borrower being called by 180 people, and this eliminates or reduces that.
Yeah, the discussion yesterday was specific to the ability post implementation, the ability, what does the playing field look like then going forward, right?
Right. And I think that's an interesting question.
Yeah, that's our July 11th topic, guys.
I don't know if you guys want to replay. I pretty much laid it all out for you. I thought I answered all questions. You said gray area, but yeah, we know it's a better borrower experience. That's the whole point of the bill.
Yeah.
Right. So I want to end on I like to end on a positive note.
Yeah.
It's a positive bill.
It's a positive bill. We have benefit, and it is aiming to solve a particular problem and has created something else that we've got to work with, but it solves the pain point that was the reason we asked for the bill and the reason that we promoted it. So
no doubt.
Kudos to everyone who worked on it, everyone who did a call to action through MA, and everyone who met with their senators and their congresspeople and did all that. I want to give people a pat on the back and say, good job.
For sure.
Yeah. And I'll just leave a funny line that Pete Mills said at NBA, because they really led from the front on this. And there's a lot of great organizations that took part in this as well, lobbying. But a bill that passes has many fathers. If it doesn't pass, it's an orphan.
Yeah. Kilmer to the rescue. I love it.
Yeah.
Absolutely. Well, you guys are great.
We're the last word is now officially on summer vacation for 2 weeks. So we'll see you back here. We'll see you all back here. Yeah, unless you want to do the firecracker show, KP, by yourself next Friday.
No. I'll be on on Newport Beach.
Right
I wish
on.
my kids were here so you guys get some kid time. Kids always crush on social, but they're not here. But Brian, you've been in here. Brian, you've been in this house.
Oh yeah.
Here we are, Park City Mountain.
Lovely.
Love y'all. Have a great weekend.
See you guys. See you in 2 weeks.
Bye.
Cheers.